Hey everybody, welcome back. I do want to do a walkthrough tonight on an SMCI trade that we had today that went very well. I want to show you how I established this level. But before we even get into that, I want to get into the market in and of itself. We talked about this yesterday, and I just want to follow through on exactly what we're talking about. The doji here, the lift, the doji. Then you have the doji that is completely encompassing the next bar right next to it. Dojis are what? Signs of uncertainty. You completely fill in that area, and then you lift and push. This shouldn't be that big of a surprise, guys, that you have blue skies above you and you're just pushing. You really don't have anything except for over here. And the majority of what you have on this side, you pretty much saw through 22. So anybody that was really here probably already is out of the way. There's a pretty easy way to show that. I can show it on Saturday's video, but what I want people to understand here is you really don't have as much up here to stop you as you think you do. And we can get rid of this 50% line now. Just for everyone's education, building permits today were lower, but housing starts were higher. That's why you saw the housing market actually start to tick up again today and actually flip that higher high. That was on that news. I would not sleep on that. I would not sleep on now. And there is a lot to cover in a short time to do it. So let's just jump right into it. And I appreciate your comments about leaving these unedited and just getting to the meat and the heart of the matter. Bottom line is the Nasdaq just looks like an absolute beast. You know, yesterday when I said we're hitting new highs, people are looking at the futures market. It's the futures market. So this is a market of the future. Just so you understand that, right? That's why it's called the futures market. If you just want to see what's really going on, just look at the Qs. It tells you very, very clearly what's going on and that you hit new highs and you had a new closing high. And if you take a look at that, you will see today that you hit an all-time high. The Nasdaq hit all-time highs today. It's very simple to understand the difference between the futures market and the actual underlying index. And if you have an issue with that, just look at the Qs. Makes life very, very easy. But understand that futures are playing to what's supposed to happen into the futures. Hence the name futures. Glad we got that out of the way, fellas. So if you see how you're trying to rally through here, that's over. There's very little to say here. You hit all-time highs. And we talked about this early in the year. And frankly, I also talked about how I didn't think it was going to happen in November, but thanks to Powell and company and their just sheer incompetence, here we are where they realized they did too much and now they're already starting to backtrack it because frankly, they must see something out there that is scaring the living heck out of them. And I have a pretty good idea of what it is. We're going to discuss it on Saturday. But RTY, we talked about this and we talked about the differentiation. Even in the pre-market public, which I would strongly suggest you watch, even if you can't tune in then, watch when you can, because we changed the format a little bit and we walk through what you need to know for the day early on. So it's a really good recap, especially if you watch the first 5-10 minutes on what you need to know to get through the trading day. Anyway, we talked about right in here and we talked about how this area was so significant and this reversal and how that reversal led to a long, nasty red bar down, inside day, nasty red bar down, up 1, 2, nasty red bar down. And you follow it up 1, 2, 3. Guess what? Nasty red bar down. And then you saw the same thing here. Red bar down followed by, and then you just get negative pattern after negative pattern, bearish patterns the whole way down. And we talked about why this was different. And what are dojis? Dojis are signs of uncertainty. So when you got a doji here for the first time and you start going through this and you're going, wow, he's right. We never did get a doji there before. And then you're waiting for that undercut because at least that undercut gives you some semblance of confirmation that, hey, maybe we're going to pull, and get Matumboed again for the fourth time. And that's not what happened. Went sideways, forms another doji, and guess what we did today? Reversed over that, encapsulate the whole thing, and pushed. This really isn't a confirm move as much as you're over. You want a higher high close. I'd like more volume, but we all know or should know that this week is really light volume. And that's why you're going to get a lot of these movements that you're getting right now. A lot of them are predicated upon one major factor. And that major factor is that you're just going to have really light volume on the week. That's why you're going to have so much manipulation. And we're going to talk about that, how you can benefit from it. So we're going to want to watch this level tomorrow. If we kind of go through the usual suspects and look at this, Arete is breaking out. If you've been following this channel for some time, you know we're in the low 40s. And we've been doing quite well with the trade. Trimmed. It's acting exceptionally well, and now you're starting to see them go after the financials, which are absolutely exploding, and she's in all the right financials. I'm not really sure why she gets so much hate if you ever read her charters, but I like this one. People are starting to look at the ARC-G. I get it, but I just don't like the names that are in the ARC-G. I mean, just genomics is not really where I would go, but I understand why people are playing that one. ARC-F seems to make more sense to me, and candidly, it's just been on an absolute tear. It's been on a tear since November 1st, really, when it came out that the Fed was not going to do anything anymore. If you knew how to understand what the Fed was saying, and that all goes back to the 10-year, 20-year, and that was really the lows, and you can see that on the high yield market as well. If you look at the high yield market, these are all setting up to just break out a multi-year basis now, aren't they? So really no signs, no cracks there whatsoever, anything we'd have to be worried about with that market. And that's one of the reasons why you're seeing the consumer finance move the way that they are. All they are doing to us, by the way, is rotation, rotation, rotation. That's all they're doing. And we're seeing the semblance of areas that we need to watch, whereas you're seeing these levels, and then you'll see how we'll all of a sudden stop at an area, and really we're just working it off. Doji breaks out, Doji, and then goes. And that's what we're seeing. Look at CVNA, for example, as well. And you can see these breakouts. Consolidation forms a cup. Maybe we get the handle. Maybe we don't. But you're just seeing massive breakouts. There's really very little more that I need to put in here besides looking at these. And let's just pull this all the way back so you can see it. And see how far back this actually goes. So that's a multi-year breakout. I mean, it's really hard to not see that you're breaking out here and how they've just been lifting it up over a period of time. Looked like it was dead here, but then again, you start looking at when did this start getting active again. It started getting active again right when they started cutting rates. Remember, everyone told you cutting rates was bad. Meanwhile, the Nasdaq's at all-time highs. So it's why it's so important to do your own research and understand things instead of just looking at some graph that some kid put together. When you actually understand this stuff, you can do quite well. It's just putting the time in to understand. When I refer to the stool and the pieces of the puzzle, life gets very easy. It's really not that hard. But yield drops, you're going to be able to get cheaper car loans. If you can get cheaper car loans, you're going to sell more cars. I mean, don't think about it any differently than that. If you wanted a loan, you might not want it a loan at a certain rate, but if your rate was going to be cheaper, you might want a loan. Think about it that way. AFRM has been on an absolute tear. Today's news, this was something we actually traded in the room and did quite well with today as soon as we saw the news. It's one of the reasons why I like having the community. Candidly, someone saw the news way before I did, and as soon as we saw it, we were able to interpret it and just get right involved and pull $4 out of this as soon as we could. I really got $4 on a partial, not on all of it, but I may actually walk through this trade tomorrow live, show you the live trade that we did. But if you watch how you're acting right in here, you stopped right at that 51.50. I don't know that we're going to get the volume to get out of these trades this week. You have GDP coming up. We have PCE this week, but you're starting to see more and more people take off, and that's fine. It creates more opportunity for me, quite frankly. You saw that all day today with the nonsense they tried to do and the shake and bake with NVDA. I mean, we saw it today all day long and kept talking about it. And here's your setup all day. Drop this down to a 5 and watch how clean this is. I mean, your whole day, let's clean it all off and just drop it down. So if you clean this off and draw a line from a first 5-minute bar, watch this. That's your entire volume all day today. It was all within the first 5 minutes. You broke once. They tried to make you think they were going to break wicks or what. Price rejection, flips, rallies, never gets to the top, tries to break again. And you start getting these higher lows the whole way. And so you think you're going to break out. And then every time, look what they did. Every single time you made a higher high, you got the doji. Higher high, doji. And all they're doing is just suckering people in. And really the one battleground for whatever reason was Monday's open. And I'm not really sure why that was so pertinent, but I always tell people this, that you always want to mark previous day opens and closes, always when you're trading. And the reason for that is this kind of nonsense. When you see it, it is absolutely glaring. There we go. Absolutely glaring. Go and take a look. If there's certain names that you like, I'm going to save you a lot of time if you're trading prep tonight for tomorrow, and you should prep for the next day. Go look at the last 10 minutes of today. You'll be able to see exactly where the money flow went today. I'm going to walk you through 2 names. But when you see this kind of nonsense where they're going to gap you down and just shake the tree, all they did was gap fill, guys. I mean, that's literally all they did today was gap fill. They shook the tree, and they were almost perfect with it, really, if you come to the close. They shook the tree, came to the gap fill, see who they could get out, took stock from a bunch of people, and then went from there. And if you know this game and you know the games that are being played right now, you can do quite well. We saw this with SMCI today, this level that I had marked off, and I told the people in the community that I would tell them how I knew where this level was, that we were going to watch this morning. And what I was looking for, and one of the things I always say is dojis are what? They are signs of uncertainty. So when you see a doji, you always kind of mark them off and want to watch how that area plays out. And they don't have to be perfect, but here's 308.14. And you can see a doji right here, how we hit that. You can see this doji here and how we flipped. Comes down, here's another doji, and we hold in there. So I did tell him I'd walk through this. Here's another doji right in here. This is a reversal pattern right on that key level. Look at this, a shooting star doji right on that level. So when we had these, I have them marked off on other charts that I look at during the day in the middle of trading. So when I was live trading this today, and I'll show you the live trade so that you can see it, all I'm waiting for is for you to get near my level. That's all I was waiting for. I've got my gap down. I closed over 318, which was significant to me. I got my gap down. I know at the ATR, which is called the average true range, I have different setup than what the ATR is actually set. I use my own settings. But as soon as you start coming down, that was it. And then I'm just waiting for the bounce. I'm just waiting for this to hold. I'm waiting to get some kind of wick here. I'm not even waiting for this. I'm buying directly into this. So this is what you call positive slippage. In other words, I want positive slippage on the down, right, for my entry. I want my entry into the down for what I'm trying to do. I'm trying to play the gap fills, what I was trying to do. Here, watch the trade.
Let's get to it. Crushing the video off the open. Good. They're going to kill semis. Perfect. There we go. Keep going. Come on, do it. Do it. Do it. And bought SMCI. Not sure about the stop yet, guys. So might get hit here pretty hard if I'm wrong. It's down 4% already, but I might get hit here pretty hard if I'm wrong, but I don't think I am, but let's see. So far I bought SMCI 309 and 10 cents is what I paid. Up $2 on SMCI. Let's watch this SMCI. Yeah, I'm right. Go. Do it. Do it. 314.9. I'm up $5. Right into that. Boom. Right into that open. I trimmed. All right. Now I got a free position. If it takes out the low a day, I'll get out. Other than that, I have a free position in SMCI for all of time. And I'm just going to leave it alone now. There's nothing really to do there. You can sell into it if you want. Do whatever you want. It's up $10 now. SMCI. I'm not doing anything with it. It's a beautiful chart, man. We're going to sit with it. Isn't that pretty? All right. So if it's a day trade, there's the easy money. Pulled more out, up 8. So that was the easy money right there. All right. You flipped here, you got 10 points on it. If you took 10, you got 10, but that was the easy money. So again, if you just were doing this for the day trade, I bought right into this. I'll walk through how I saw that. I can walk through that later. And then up, trimmed, up, didn't do anything. When it broke here, trimmed again. If this was your day trade, you should have been out here. Trade's over, right? Look at this. Look at this nonsense. Do we add to it right there? Man, oh man, they just played with people today, didn't they? That's why you got to decide what kind of trader you are. Like when you get into these trades, not everybody's going to be willing to, buy at 309, sell, you know what I mean? Sell and then go, oh, well, now I'm at 312. What should I have done? So you got to figure out who you are before you even put the trade on.
Now, I think instead of me pointing out and saying I made X or anything else, seeing the actual trade live instead of me just pointing at the link or showing you the timestamps, which I can do in the community, actually watching the trade play out and seeing how it plays out live. And there's something I say there at the end. And I want you as a trader to pay attention to exactly what I say there. When you put a trade on, you need to be abundantly clear as to why you're putting that trade on. So for me, I liked this price point. I didn't like this price point. I liked this price point. So I was able and afforded the opportunity to buy the stock at this price point today. I took advantage of that opportunity. When it's trading up, if I've already made the opportunity in my head that this is nothing more than a day trade, then you need to be scaling out when it's nothing more than a day trade into positive slippage. If you are saying, I'm going to hold it, now you've made a decision that you're going to hold it. And at least at that point and moment in time, that's how you're trading it. You may change your mind, but you have to know what you're doing when you put the trade on. That's what a lot of people, I think, mess up on. They don't go in understanding, is this a day trade to you? Is it a swing trade? To me, this presented a nice opportunity to get a trade off. But when it traded up, I'll still pull something out to protect my downside that allows me to stay in here. And then I got a little move right here that you could see when we all of a sudden were up about $10 on the trade. I have a doji. Dojis are what? Signs of uncertainty. If you're going to break here, might as well pull more out. And then it just allows me to be able to hold this if I want to hold this or sell it. But if you're day trading it, then what you're doing is you're scaling out as it pops up, comes down, pops up again, and then you're just scaling out of it. You already know what your game is before you play, right? It's like any other game that you play. And whether we want to admit it or not, this is a game and you're playing against the smartest, most disciplined people in the world. Therefore, you have to act like it and you have to be set up appropriately before it begins. So I hope you found that helpful. Comment below if you want to see more of those. Also, I do appreciate greatly you sharing these videos. You'd be surprised of the emails that I get from you guys from sharing them. For people that aren't even on YouTube, they're just like, hey, my friend sent me this. And, I really just want to say thank you. And so I really appreciate that stuff. And it helps counteract the fact that I don't run ads in the middle of this, which obviously the algorithm of YouTube likes a lot. So as long as we keep sharing, I'll just keep not running ads. But if you see what's going on with the firm, why is this moving? I want to get to this. So a firm is moving for one major reason. They signed an agreement with Walmart. This agreement allows them to be in their self-checkouts. So now if you go through self-checkout, you're going to be able to use this and pay later on that toothpaste or a bar of soap or whatever the heck you're getting at Walmart, right? I guess that's a good thing. I'm not really I'll try not to comment on it again, but I don't get it. But anyway, let's just see how this plays out. I understand why people use these services. A lot of them, they don't go in your credit report. So these people that are getting credit cards on top of it don't know. It's kind of interesting, actually. I don't know how they're doing that. And I don't know if that'll be fixed eventually, but that's one of the reasons why people are using them. So anyway, so you see this level sitting right in here. We tried to get through 51.50 today. And I didn't know that. I just found that out recently. That's one of the benefits for people to use this. We see how you can't get through. So we know that 51.50 is a level. We had a nice trade in this today. Market's really affording a lot of trades lately, a lot of really good trades. But this is setting up for higher. These consumer financial kinds of names are setting up to push higher. I would definitely pay attention to them. Other names that are moving that just are on fire. Mara was another great one today to trade. And these things, are they getting extended? Yes. We talked about this, and this is what we need to cover. When people are looking at Tesla and they're watching how Tesla is acting, and let me just blow this up real quick. This is a really important part that people need to understand right now. We talked about the stool, and we talked about how the stool is playing out and what exactly is happening. For those that aren't familiar, here's the stool: macro, fundamental, technical. This is our trading environment. And sometimes we lean on the macro, sometimes we lean on the fundamentals, sometimes we lean on the technicals. What's happening right now is we are leaning heavily on macro and have for a period of time. It's not always this way. The Fed has just really intervened into our lives, but believe it or not, in 12 to 18 months, we might not even care what the Fed's saying anymore. We might be more focused on the fundamentals of a company such as NVDA or ARM, or who knows what that company will be, or on the technicals. So like any stool, sometimes you're leaning on one leg more than another. But right now, Powell and the fact that Bostic likes to speak and change his mind every hour has really got us glued to what the Fed's saying. And now we're watching bond auctions, things along those lines, because it's just ever changing. But this is what's happening right now. You start looking at names like Tesla, and this is going to get really frustrating for traders. And I just want to point this out. The frustration's coming in because you're rotating. You're constantly rotating. Go look at the names, and I'll go through them, but go look at the names in the last 10 minutes and go look at what happened. But if you see a shooting star like this, you're going to be, I need to get out of this. I'm going to show you why you're running into a problem in a second here with these kinds of names. Oh, I need to get out of this, right? I got a shooting star here. I failed the breakout. I need to get back in. I'm going to show you why your technicals are having problems. Even here, let's clean up NVIDIA today. Oh, this is broken. It's broken the lower low. We're unable to get through. Surely there's going to be more selling. And then the selling just stops. And people are trying to figure out how come we're closing at the highs of the day now. And again, I'm going to show you in a minute. But remember what we talked about with the sectors. And for those that don't remember, I'll show you very quickly. And I really do appreciate the fact that I don't have to edit as much. Your comments on that are greatly appreciated. But if we take a look at the sectors, and you can see how the sectors are moving. I have NVIDIA in here. I'll just leave it in for a moment. And this is going back for a period of time. But all I really want to do is go to a 1 minute. And let's take this out so that we don't get confused and it doesn't skew everything. And I'm just going to drop the SPY in there. So then we're just going to go right to today. And I really just want to point something out that is happening so that you guys can see it. And let me just get all the way to 9:30. There we go. Perfect. All right. XME's leading. XBI, XOP. All right, so energy is leading today. But you notice a change where you're all of a sudden, that's what's leading is now everything is becoming newer and newer. It's changing. Now, see what's leading right now? XLE, XLF, cloud. Okay, go to 230. Why do you want to go to 230 besides it's a dentist's favorite time of day? Get it? 230. You want to go to 230 because that's when institutions start placing their bets and they start moving money around. And you're going to notice a shift here from what I just showed you earlier in the day. Now they're buying utilities. What else are they buying? What else is up here at number 2 at 230? You're starting to buy biotech. What else are they buying? Healthcare, XOP, exploration, buying a little bit of defensive names. But here comes XLK. Now, this is where, for me, it gets super interesting. So let's go take a look at just the last half hour. Well, we might as well start with the hour first because you're here. All right. So here you are in the last hour. You can start to see what the top 3 are and how they're starting to move. And then you drop into the last half hour and you can start seeing how they're starting to move and what's starting to drop in. So as you get to the close, now if you go to market on close, I always find this fascinating because here's the market on close spot. Right at 350. Look how it all connects right in there. See that? All right. So we're going to get to that. And then what do you see happen at the end of the day? Market on close, for those that don't know, market on close is when the institutions have to have their orders in. If you want a guaranteed filled by the market on close price, meaning you want the price of market on close, buy or sell, you have to have it in no later than 350 so that the specialist can put the orders together, right? That just makes sense. They need a little time. Okay, stocks from 350 on. What were the biggest market on close orders? You can use this and then determine in the last 10 minutes of the day, what did people have to buy? What did they have to buy? They had to buy semis. They had to buy utilities. They had to buy XLK, XLI. You can just go through it, right? And what are you seeing different? They were net on XLC. Well, if you go to yesterday, and we just go to yesterday for a second, and you took a look at what moved yesterday and what was the driving force from the 18th on, now you can see that XLC was the leading area. Okay, XLC was a leading area. You had to watch XLC. Everybody had to be in XLC. It was something where, oh boy, we're really moving. Here's XLK down here. Okay, what we're seeing is constant rotation of the leading names, and they're constantly cycling us through, and people keep waiting for them to break down, and they're not breaking down, and people don't understand why they're not breaking down. I'm going to get to that in 1 second. I do want to say this. I've been saying this since yesterday, and I want to get this out while I'm thinking about it. We covered this today in detail, but this name, we're actually short this via puts and just absolutely doing exceptional in the put trade here. I bought the 49s. I have the 49s for several different expirations, but I'm not going to pull the trade up. We have the puts right now in here because I want to show you something else. I think that this is going to be a talking point for the election. The fact that you're going to have the U.S. steelworkers that wrote a really nasty letter to Nippon about this deal that you didn't even include us. I think this becomes a ball of wax. I really do, or a can of worms, or whatever analogy you want to use. I think it becomes that. But watch this really closely. I'd be really careful thinking that you have a really easy 6-7 points here, guys. I really would. We paid 20 cents for some puts yesterday, the ones that expired this week with 49. You know, I was fortunate enough to get out some at $1, some at 90 cents today. But let me show you something because this is pretty interesting, and this will explain why you're running into the issue that you're running into. Now, the issue that you're running into is that you keep waiting for the market to pull back. This is Sediment Trader. This is not me. I have no affiliation with them. Again, we don't call this smart money, dumb money. We call this institutions and retail. 3 years, okay? Blue, institution, red, retail. One of the core things that we're noticing is these pullbacks. And then when, oops, I'm in the wrong spot here. Give me a second. For some reason, it wanted to play with me there. And I'm not sure why. Let's go and do it that way and click on here. And that's the beauty of not having to edit this. Now, I was wondering why it didn't line up. But you see that right here? See how you're at a level that you've never been at before in a very long period of time, except when we had what? $1.7 trillion in the market. And then you can see how this is rising. When is really the last time that you have looked at this chart and seen that smart money and dumb money are rising at the same time? This goes back to the stool where you have a massive macro shift and we're not aware of how much that shift is changing institutional buying and how it's changing retail buying. We're not aware of that. We don't know yet. We're going to find out how much of this $7 trillion in money markets is actually going to start chasing the market. Because there's several sectors of this market that are really depressed. For example, there's 200 names in biotech that are trading under cash. Not anymore, but about 2 weeks ago when we started looking at them. So, all right. So they're both rising. Take a look at this on a 3-month. They're both rising. I really could not find another time where they were both rising at the same time. So while they're both going higher, this is based upon the fact that we have macro going on out there. So when people keep waiting for this, quote, pullback that is obviously inevitable and we are grossly, quote, overbought, which I have been stating for some time, even though I'm trading, what you do in overbought conditions is you just keep one foot out the door. You keep moving the stops up and you keep using trailing stops. You don't not participate and say the market's wrong. Okay, the market doesn't know you exist, right? All you want to do is pull money out and you just change your strategy to fit the current market. This is why people keep waiting for the market to pull back and not seeing it pull back, because institutions and retail at the same time are both committing capital because you had a major shift in monetary policy. That's it.